Hello there and welcome to the look ahead for Thursday, the 14th of November with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be watching out for Australian employment data. Then in the European session, we've got Eurozone GDP. We've also got the minutes to the latest ECB meeting. And we've got Bank of England Governor Andrew Bailey speaking. In the US session, there's US PPI as well as jobless claims. Federal Reserve Chair Jerome Powell speaks, and oil, we have the monthly report from the EIA. So plenty going on tomorrow. I think what we'll focus on is what's happening in the euro US dollar. I know we've spoken about euro US dollar quite a lot recently. Obviously, we've got the minutes to the ECB meeting. They do feel a little bit out of date in light of what's been happening as far as the US elections are concerned. But this was the meeting where the ECB cut interest rates by 25 basis points. The market is expecting another rate cut from the ECB in December, although the policymakers haven't necessarily confirmed that. But I think the big question is, will it be a 50 basis point rate cut or a 25 basis point rate cut? We've seen the market. I'm just going to bring up euro US dollar here. This is the chart for euro US dollar. Obviously, as I mentioned, got GDP data coming in as well tomorrow. And I think one of the reasons we're seeing this big sell-off in the euro is concerns over, obviously we've got US dollar strength to contend with, and also concerns over what Trump's potential trade policies will mean for the euro. And we've seen it break down some really key levels. So we've failed at the resistance there of the 100 SMA. We've taken out the 200 SMA, fallen below this rising trend line that's dating back to October, and fallen below 106.70. That was the low that we saw in April. So we're trading at fresh lows for the year, down below a low of 105.55. Now, if we get weak data coming in tomorrow, and then let's not forget we've also got US figures coming in as well. We've got wholesale inflation for the US, which is expected to be a little bit hotter than the previous months. We're expecting to see 0.3% on PPI and 3% on an annual basis. So if we get hotter inflation from the US, and we get sort of weaker growth and the ECB pointing to further rate cuts, then we could see the euro come under further pressure. But as I said, a lot of this, I think, is those concerns over what a Trump administration could mean for trade in the Eurozone. As far as levels to be watching out for now, we've got 105, the round number. It's still some way off. And then you've also got the 104.50, which was the low of 2023. We do have the RSI tipping into overbought territory, so just be cautious of that. So sellers could be cautious. We might see some consolidation around this level. On the upside, levels we're looking out for 106 is the level on the upside immediately. Then we've also got 106.70, which was the June high, and then above that we've got the 108 level. So there's quite a lot to go on the upside, but I mean, this is clearly a downtrend that we're seeing right now. Let's just also take a quick look at the DAX whilst we're talking about Europe. The DAX is just coming out. It's just trying to break out of this trading pattern that it's been holding in within sort of just over the last week or so, since the end of October. It's been capped on the upside by 19,500, capped on the low side by 19,000. We're just below that now. It has recovered from session lows, which were 18,835. But I think this is key. If we get a close below this level, the 19,000 level, then that could open the door to further losses. You've got the 100 SMA there at 18,600, 700, and you've got the 200 SMA there at 18,500, more or less, 18,400. And then below that, you've got the 18,300, which is the September low. So they're the levels to be watching out on downside. Momentum's in favor of the sellers, but as I said, it all depends whether we can really get a close below that 19,000 today. Then just finally, as I mentioned, we do have Andrew Bailey also speaking. Here we go. This is the pound US dollar. Again, this is owing to that US dollar strength that we've seen. We also had that slightly weaker unemployment data, which actually rose to 4.3%. And that actually saw the pound take out that 200 SMA yesterday. We're finding support around this 126.85 level. That's the August low. As long as that level holds, that'll be the level that we'll be looking to hold, and sellers would look to potentially recover and retrace back up to the 200 SMA at 127.25 and the 127.50 in order to be able to sort of be in a more neutral position. A break below this level here, that 126, this level here, which shows the 127 level, 126.65. That's the low that we saw in August. If we break below that, then we could be looking for a further sell-off towards the 126 round number, and then down towards 125. They're the levels to be watching out. As I said, we've also got data from the US to be watching for. So if we get hotter than expected, wholesale inflation, we've also got Jeremy Powell speaking. So that will be interesting, particularly in light of the Trump victory. However, we have heard that we have heard that Powell is, we heard him speak after the FOMC meeting. So whether there'll be much more information that's new from him, although we have had inflation data since then. But yeah, the market's looking out for further cues over rate cuts from the Federal Reserve. Will a December cut be coming? The data today, the inflation data, broadly supported another rate cut from the Fed of 25 basis points. It was in line with forecasts at 0.2% month on month. So I hope you like what you've seen, and if you do, then please do give this video a like, and if you would like to receive more videos like this, then please do subscribe.